Yikes, I got some crazy news for you, which shows why the large mortgage companies have higher interest rates than other companies out there. With 2022 quickly wrapping up, many realtors are looking to set their goals for 2023. Now, when you set your goals, you gotta ask yourself, are these SMART goals? Now, SMART goals is an acronym for specific, measurable, attainable, realistic, and timely. Now, look at your goals, what you want to accomplish for 2023, and ask yourselves, are these SMART? Let's put some examples together. So for example, let's say I want to close more homes next year. That would not fit the SMART acronym because it's not specific, right? Not specific goal. So let's talk about some goals that would be SMART goals. So let's just say you want to close 15 listings and 15 buy sides. I don't know if that's a lot for you or not enough for you. Let's just use that example. Are those SMART goals? Well, they are specific. I want to close 15 listings and help 15 buy sides. Are they measurable? You absolutely can measure it because as the year is going on, you can see how close you are getting to it. Are they attainable? Absolutely, they're attainable. You know, if I was to say I wanted to close 3,000 listings on there, that's probably not attainable. Now, you got to ask yourself, is it realistic? Now, some people get confused attainable versus realistic. Attainable means that it's just actually possible. Realistic means, are you able to accomplish it with your other life goals and priorities? So for instance, if you don't have a lot of time to put towards work, you're not going to be able to get as high as if you were to be able to put more time. So 15 list sides, 15 buy sides, only you can determine if that's realistic for your other life priorities. And then timely. Is this timely or have a time frame? Yes, it does, because you're looking to accomplish that in the year 2023. So as you're making your goals for 2023, ask yourself and make sure that they are SMART goals.
All right, let's go over business and getting more business from our previous clients. One of the simple things we can do is call our clients. So when we do this, let's not just text, let's not just email, but call your client and then call them back if they don't answer. Do a double call. Reach out to them, express this time of year, the gratitude, love, all those things, and share with them that you are trying to build your business in this tough market. But here's the thing, we're not really asking them directly for business. We're letting them know what we're trying to accomplish, reminding them of the great service that we provided, the great experience that they had, and then we're asking them if they know anyone that can share the same experience. So ask your clients today, reach out, create that connection, maintain that connection, build that connection, and let's get some more deals in for you.
Yikes, I got some crazy news for you, which shows why the large mortgage companies have higher interest rates than other companies out there. In the third quarter, the independent mortgage banks, which makes up a majority of the large mortgage companies out there, lost on average $624 per loan. They're losing money every time they close a loan. But here's the craziest thing, is it's costing them over $11,000 to get a loan closed. They cost all their overhead, all their costs, employees, all those different things, which is no surprise where the large mortgage companies, their interest rates are much higher than a company like ours. We're the largest mortgage broker in the country. And why is that? Why do we have lower rates and they have higher rates? Well, because they have incredibly large overhead structures. And so in order to try to cover that, they have to jack up their interest rates, even though they can't jack them up high enough to cover their costs right now. Whereas us, we don't have that problem. We're low overhead and we have many different options for clients. We're not stuck going one which way, so we can always find the better deal for the client. So crazy news out there, which makes sense on why you're seeing some of these companies have much higher rates than other companies out there. So if you want to help out your buyers and making sure they get a fantastic interest rate, don't direct them to an independent mortgage bank, direct them to an independent mortgage broker. Let's talk about interest rates a little bit. It's been nice to see the interest rates decrease from these crazy highs that they have been, and it has many people optimistic that we're going to see a further decline in interest rate, and you're going to see the Fed no longer increasing the Fed rate. But is that what the Fed is looking to do? Well, if you look at and follow what the individual members of the Fed say, is that's not their outlook at all. In fact, they're saying they want to continue to increase the Fed rate, which is probably going to mean we're going to have higher interest rates for the time being. But is that all doom and gloom? Absolutely not. Because there's still great strategies to help your sellers sell their house and help buyers buy a house despite the higher interest rates. For buyers, one of the ways that you can ease that burden is utilizing a temporary buy down, 3-2-1, 2-1, or 1-0 buy down. And for your sellers, it's a fantastic way to market their house instead of just dropping the price. Market is that the seller would provide a credit to help with the temporary buy down. And there's still tons and tons and tons of demand. Other studies have shown that even when the rates decrease a little, mortgage applications go up. It's just very indicative that there are a lot of buyers out there still wanting to buy. So don't let the bad news from the Fed and what they have to say get you down, because there are opportunities everywhere.